So far we have recorded all the debit balances for question number 7, and now we will record all of these credit balances or credit items in the respective notes under the balance sheet as well as the profit and loss account. So here we had the notes. These are the notes to the balance sheet, and some debit side balances that come under assets have been already recorded, and also in the notes to the profit and loss account we've recorded the debit balances, that is the expenses, the interest expended and operating expenses. So let's look at these other items over here. Now in the notes to the profit and loss account, the first one that we have is interest on advances. Okay, so interest on advances, just clear this over here. The amount for interest on advances, and I will just, if it is a direct amount, we will write it in the outer column, if not in the inner column. Okay. This will be the current year column, since we don't have any previous year's figures as we have done earlier, and this is the inner column. So what we have here in this problem, we're given two items under interest earned. We have already marked them. Interest on advances is 800 and interest from investments is 125. Okay, so this total comes to 925. Is that fine? So interest earned total is 925. I guess we can write it in the outer column just to make it more visible. Alright, so that we know where exactly it is. Okay, next item we have commission, exchange, brokerage. We will see where that comes. Amount of rupees 200 in the schedule 14, other income. So commission, exchange, brokerage. Profit on sale of investment amount is 20. Okay, we have yet another amount. So we will say third one is other revenue receipt. So any other type of income, revenue income that was earned by the bank, this is 80. Total we get of all three is 300. Okay, so total of other income column is 300. Done. So I think we have our profit and loss account items. All of the 4 schedules under profit and loss are complete. Next we will see what other items are left. We'll go by this trial balance here. We have share capital. These are balance sheet items. So under share capital, the first one, no details as such are mentioned about how many shares of this bank are being held. Okay, so directly in the outmost column I will write 2000. Okay, highlighted, underlined. Next, let's see, we are given statutory reserves, and this statutory reserve, we consider that it is the opening balance. Since we are doing the complete problem where we are going to tally the problem, this is 900 of the statutory reserves. Then in case of statutory reserve, we will make an additional transfer to the statutory reserve for the current year. For that we will first calculate the profit for the year, and from that we will calculate the amount of statutory reserve that is to be transferred. Now next is profit and loss account 650. This will not come to the balance sheet directly. Alright, balance sheet will have only the balance of the profit and loss account which is brought forward. So where does this previous year's profit or balance go? Now over here you have under the profit and loss account, in profit or loss you have net profit or loss brought forward, that is the opening balance. So your net profit opening balance has to go over here in the column here. 650. Alright, current year's profit we will calculate as we calculate all these expenses and incomes, difference between them. Okay, so for now previous year's balance is 650. So this is done, taken care of. Let's see where the fixed deposits come. This is schedule 3 under the balance sheet. We've already written all the amounts over here. If I could just shift this below. Yes, so just to follow this order, fixed deposits are 275. Okay, then saving deposits are 325 and current accounts balances are 125. Okay, total of these is 725. Again, I can just write the total in the outer column instead of having a separate line here. So total of all the deposits 725 is complete and is underlined. Then next schedule is schedule 4, borrowings from other banks is 300, not to be totaled up yet, and we have yet another item, borrowings from RBI. In this particular problem we have two borrowings from RBI, amount is 100. Okay, so total of these two, again that comes in the outer column, 400. Done. Next is schedule 5, that is other liabilities and provisions. Once again we have two items over here as well, bills payable and interest accrued. Bills payable amount 25 and interest accrued amount 75. Okay, interest accrued. Now this is interest accrued with a credit balance, which means it's a liability. The interest accrued with a debit balance we've already taken under other assets. Okay, this is total is 100, so we're done with that. So all of our credit balances also are complete. We have done the posting so far. We have taken all the items exactly to the schedules that they belong, and we have got the totals to some schedules which do not involve any type of adjustment. Okay, then let's look at the additional information and see if there is something to be posted without any working notes. We have bills for collection. The total is 235. Now bills for collection, we know they don't come under any notes. They directly go to the balance sheet over here after contingent liabilities, and we just write the amount. So since all of these amounts are in thousands, this 235,000 becomes 235 when reduced to those many decimals. Okay, so bills for collection is 235. The next adjustment is about advances. Now you have been given certain advances. Let's look at our advances note to the balance sheet. Yes, so schedule 9, we have three types of advances: bills, cash credits, overdrafts and so on, and term loans. And for all these three you have been told or given the classification, like under cash credits. Okay, the first classification, that is cash credits, overdrafts and demand loans. You have again further classifications. So within these there are some loans which are standard, some loans are substandard, some loans are doubtful, and some are loss assets. Same way for term loans, classifications and bills purchased, all are standard assets. There are no substandard, doubtful or loss assets, right? See, I told you before when we did a similar problem that this asset classification of standard, substandard and so on, this is done based on the NPA situation. That means if the person who has taken this loan, alright, and by person I mean the many clients, the many individuals who have taken these cash credits, these overdrafts, these term loans, If these people fail to repay the loan, alright, to service the loan, we call it, repaying the EMIs that includes the principal and the interest, if they fail to pay them over a certain period of time, then they will be classified under these categories. Standard assets means those which do not bear any risk as such. People have been paying it regularly. Substandard assets are those that have some risk involved, right? The NPA has been there for less than a year. Then more than a year or up to 1 year or more, you call it a doubtful asset. And then if it is completely written off, you have like lost every hope in recovering that money from your client, then it becomes a loss asset. Okay, so according to these figures given here, we are going to calculate what should be the provisions on each one of these categories, and we will use this table itself to create our working note wherein we calculate all the provisions on each of those categories. All right.